From there, let's check in on equities markets, shall we, and see how they're faring in Africa. We see the NGX still riding that bullish trend there. We see it up at intraday 0.23%, and this is on the back of lots of volumes and values we're seeing in the banking sector. It's up now 0.23% at 252,990 points. We see South Africa also in the green, slightly flattish, 0.06% at 116,838 points. And let's look at EGX 30 in Egypt. They were, however, in the red, down 1.4%, and that's about 53,291 points for that index. We see Kenya closing Tuesday session in the green. That's 0.56% up. And let's move on to what's driving bullish sentiments at the NGX, and we're joined by Onose Asotie Enawolo, Senior Investment Analyst, Main Street Capital Limited. Onose, it's good to have you join us. Honestly, if you could unmute, but just very quickly, what stocks are driving intraday numbers as we speak? I know I mentioned the banking stocks, but are there other stocks that are pushing investors to put their money on the exchange?
Yeah, definitely. So you do have the banking stocks, but you also have stocks that are seeing a lot of volume and value, like the NGX group. You also have Aradel, which is a favorite amongst investors this year. You'll have MTN as well, that are right now really pushing a lot of the value and the volume on the market.
So the NGX, we've seen that performance fantastically well for some time, for a lot of sessions now. But is this just being boosted by good earnings that we've been seeing from listed equities?
We're seeing a lot of factors that are boosting the equities right now. Yes, on one end, it is good earnings. We people have discovered, or we have seen in recent times, over the last several months, a lot of companies have proved their resilience, especially in the FMCG space, and even some tier one banks. But one thing that you also need to keep in mind is that there are a lot of structural factors that are in play right now that are really creating tailwinds for the markets. Number one is the pension, increasing the limits for PFAs. Another is a lot of foreign portfolio investors coming in to try to front run our FTSE reclassification. So there are a lot of tailwinds. Yes, on one hand, you do have positive earnings, but there are also a lot of structural tailwinds, that are expected to reprice a lot of stocks.
So speaking of earnings there, let's just jump on that. Fidelity Bank released that positive performance for the full year 2025. That's their audited results. The gross earnings, we saw that up 45%, 45.65%, 45.6% year on year. From 1.04 trillion they recorded in 2024. Shareholders' fund crossed 1 trillion naira mark, but profit after tax came under pressure, declining by over 12%. Speak to us about the drivers here.
Yeah. So for Fidelity, one thing that is affecting not just Fidelity but other banks like Fidelity is, you have gains from derivatives. In specifically in Fidelity's case, you had a situation where they logged, like, I think was it 200 million in derivative trading losses, for the year, and that really pushed down their push down their profit after tax. And so for some banks, it could be significantly less foreign exchange evaluation gains that are hampering on their profit after tax. But I know that in Fidelity's case, it was one of the major factors was largely the derivative losses that they suffered during the year.
Okay, looking at their interest income, it looks like they made a lot more money from lending money to people. How much of that you think contributed to their income vis-a-vis maybe other sources that they're probably looking at, say maybe because we also see that net loans and advances that declined 2.4%. I'm just wondering if they made a lot of money from interest income, how do we now marry the fact that their borrowing also declined?
So that's so one thing I did notice with a lot of banks is, depending on the type of bank and what they do, some banks had situations where a lot of their interest income was from core lending, and banks like FCMB fall within that category. There are some banks like UBA that they are lending. Yes, you had core lending, but it was largely to corporates. I think UBA and GTCO as well. And then you had some companies where some banks where a good chunk of their interest income was from government securities, right? So I know there's a particular bank, I'm not sure if it's Zenith, where their interest, about 68% of their interest income was from government securities, treasury bills, bonds, and even the standing deposit facility, right? And when you have situations like this, yes, core lending, you have a situation where core lending might reduce in some cases. Some banks are trying to be a bit more prudent, especially post recapitalization. They're trying to pay a little bit more attention to who they lend to, so that they don't have situations where, like the forbearance and really high single obligor limits and those kind of situations. So you do have it. So for a bank like Fidelity, where interest income was higher but core lending is lower, then you now kind of have to look to say, okay, is it from treasury bills and bonds? And if it is from treasury bill and bonds, then okay, over the next 1 year, can we expect to see a similar performance, from the treasury bill and bonds and the fixed income that they hold, over the 1 year? And so I think these are some of the numbers and some of the things that investors are really looking at, when looking at Fidelity specifically.
Definitely, banks appears to have become bigger in size. We're seeing that total assets rising above 10 trillion naira there. This is talking about, is it just saying that the bank is controlling more loans, investments, cash? What's this about? What's the mix here?
Uh, so for when now, of course, we expect that there will be a significant rise in assets, for a lot of banks, right? And for Fidelity, yes, you had an increase in loans, right? I think almost like 1 trillion, right? More new deposits from clients, which gives them a lot more firepower, really, for loans. So yes, you did see, well, not more loans, but we did see more investments in debt instruments. So a lot of that cash that was coming in from deposit from customers were being pushed into debt instruments, right? And so yes, the assets in total, the assets will increase because as the liabilities are coming and they're putting it into debt instruments, that now makes them assets. So like I said, you will see a lot an increase in assets, right? And then it now depends on the asset mix. But I think one thing that you could really pay attention to is asset quality or asset utilization quality. As long as the asset utilization quality continues to be, sustainable and acceptable, I think we are not so worried about where they get their interest income from, as long as they can ensure that the way they are operating, they maintain a specific asset utilization ratio.
Definitely, we don't really care as long as you're profitable. But looking at the shareholders' funding, that crossed 1 trillion naira, very big one for Fidelity Bank. But no dividend has been announced in this result. Are they erring on the side of caution here? What's happening?
Um, so we haven't gotten any form of announcement or communication as to why there isn't any dividend. But just looking at their equities, at the equity side of their balance sheet, you see that yes, total equity crossed 1 trillion, but a lot of that were in other reserves, some of which they are not really allowed to touch. For example, the non-distributable regulatory reserve, the amount of funds in that reserve, it rose to like almost 300 million from I think 150 million the previous year. While you also saw an increase in statutory reserves. So when you are looking at where they would actually pay dividend from, which ideally would be your retained earnings, the rise wasn't. There wasn't even a rise. Reserves, retained earnings was like 185 billion last year, I believe. And then so in 2024 rather, and then in 2025 it's about 173. And so that may now paint a picture, give you an idea as to why they did not, actually end up, or why they may not actually end up paying, dividends. Because you have a situation where your reserve earnings and the part of their equity that they can actually do something with has declined year on year. So if I were the management of Fidelity, I'm thinking, okay, well, we're not exactly known as being a dividend stock. Yeah, we've paid dividends over the last 4 years consistently, don't get me wrong, but we're not like a Zenith or a GT that people are primarily looking for dividends. Like Fidelity could still not pay dividends, and the backlash will be as severe as a UBA. So if that's the case, and our retained earnings are have dwindled year on year, in a year where our interest income rose, then I might want to just pause on the dividends. But then again, like I said, we haven't got any official communication from the team or from the bank to say, okay, we are definitely not paying, and this is why we're not paying. So tomorrow they could announce that they are paying, and tomorrow they could announce that, okay, look, we're not paying, and this is why. So it's still I guess in the balance right now.
Okay, is that why we're seeing the share price currently trading above just 121 naira, not as much as we hoped for, especially when a result like this comes out?
Well, yes and no, because on one end, if they had announced dividend, then I'm sure that, especially if they announced something that was higher than what they paid last year, I'm sure we would have seen the share price really fly. But to be honest, with or without dividend, Fidelity is a I would classify Fidelity as a growth stock when it comes to banking. As a stock that has a lot of growth potential. So we did see on Monday, yeah, I think on Monday or yesterday, we did see price kind of wobble a little bit, especially I think it was yesterday, the market where the result came out, but there was no talk of dividend, right? So price pushed down. I think it started the day at around maybe like 20, above 20 naira, 21 naira, and it pushed down to around 20, or the very high 19s. But you see that price has already recovered, and it's trading around 21, maybe not, maybe even 22 right now, and price has already recovered. So what I'm picking up is, unless there is going to be dividends, and maybe some people are already kind of betting on that, which may not really be the case. Personally, I think that what we're more seeing is, okay, market is digesting the fact that, okay, they may not be dividends. Plus, if you remember, 2 weeks ago there was the whole contagion with UBA thing, and Fidelity was hit, right? And so I think that a lot of the pricing of there's a possibility of no dividend, that kind of showed when price fell about 2 weeks ago from like 22, 23 down to around 18. So that already happened. So now if that already happened and market had already reacted to it, the possibility now is something that had been considered a while ago, when you're looking at price. So it's still not happening. It's like, okay, we're used to it, we know, but price is still recovering. So it shows, okay, people are still willing to buy, even if they may not announce dividends, for 2025.
Definitely, we do know that many tier two banks like Fidelity, Wema Bank, FCMB, they posted strong earnings in 2025, and definitely we'll say that they're kind of giving the tier one banks a run for their money. Thank you so much, Nasir Asote and Senior Investment Analyst, Main Street Capital, for sharing your perspective on Business Incorporated.
Thanks for having me.